All right, Goes family, welcome back to Patterson on Properties. Hopefully, you guys are having a great and exceptional day. Today, I'm going to be talking about home flippers' profits have dropped. So, for the last 2 years, the real estate market has gone through its hurdles, ups and downs, all that great stuff. The stock market, and flipping, flip flopping more. Both these areas and the economy has been flip flopping more than a well-groomed politician. But usually, when people talk about real estate market, they only talk about prices of real estate or the interest rates. Since COVID-19 in 2020, the demand for housing across the United States grew so much that it was just ridiculous on multiple levels, for homes being bought sight unseen, bidding wars going on, and until the break of dawn. And now at the end of the day, we're at the end of 2022, as I'm making this video in December 2022, some flippers are having a hard time finding ways to make profits in their day-to-day business and grind. According to the article that I read the other day, in the third quarter, gross flipping profits, which is the difference between the median purchase price paid by investors and median resale price, dropped to $62,000, according to the ATTOM, a real estate data provider. That's down 18.4% from the second quarter and down 11.4% year over year. It represents the smallest profit since the end of the year 2019 and the fastest quarterly drop since 2009. With that drop in gross profits, the return on investment fell to 25% from 30% in the previous quarter. Not bad, but not good. Still, ATTOM notes, or Adam notes, it's not the size of the profits, but how quickly they are falling. And in my personal opinion, home flipping is a great real estate strategy to focus on if the numbers, and I definitely mean if the numbers, add up and work. And most home flippers eventually get into the aspects of real estate, like rental properties, wholesaling, or becoming a real estate agent, title company, whatever have you, property management company, whatever have you. Because like anything else in today's world, you have to have other streams of income in order to sustain oneself, regardless of who's sitting in the White House, governor's house, or mayor's house. The article also stated that with profits shrinking and higher mortgage rates hurting affordability, for potential buyers, the share of for potential, basically affordability for potential buyers, the share of home sales that were flips fell well, and roughly 7.5% were flips in the third quarter, still historically high, but down from 8.2% in the second quarter. Flips, defined as homes bought and sold in a 12-month period, made up a 5.9% share of all home sales in the third quarter of 2021. Home prices are weakening quickly. While renovation costs remain high, it's apparent that fix and flip investors aren't immune to the shifting conditions in the housing market, said Rick Shardga, Executive Vice President of the Market Intelligence at Adam, in the release. With demand from buyers weakening, prices trending down over the past few months, and financing rates significantly higher than they were at the beginning of the year, flippers face a much more difficult environment today, and probably will in 2023 as well. And I could not agree with that statement more, because even, purchasing a home in today's world is definitely different than it used to be in 2019, before all this craziness happened with the pandemic. Now, the upside is that home prices are finally going down to somewhat reasonable price range, but interest rates are making it pointless in some parts of the United States of America to even purchase real estate for investors at any level. The best markets for investors nowadays is the Midwest, Pennsylvania, certain southern states. Outside of that, most investors, it doesn't make sense to buy unless you just want access to millions of dollars, i.e. meaning you're buying real estate, you're breaking even, might even be losing money, but you have the opportunity to take equity lines of credit out of that property, or the value of that property will go up. Therefore, you have the opportunity to sell that property in the future. So even though mortgage rates have fallen a little, it doesn't matter to a fix and flip investors, since they operate in a cash, and I mean cash only basis, because they purchase the properties to sell it, not keep it. The article ended on this note stating that another factor weighing on investors is the cost to flip. Prices for labor and materials remain high, and supply chain delays are still factoring into renovation costs. The average time it took to flip a home in the third quarter did drop slightly to 163 days after rising for 3 consecutive quarters. That is still, however, longer than the 149 days it took to flip a home in the third quarter of last year. Markets that showed the highest flip rates were Phoenix, Arizona, Spartanburg, South Carolina, Atlanta, Georgia, and Gainesville in Georgia, and Winston-Salem, North Carolina. The markets offering the best returns were Buffalo, New York, which surprised me. Well, I mean, I guess it doesn't because, what is it? Buffalo, New York is known. I've never been there, but everybody I've ever met from there say it's a place that's not worth spitting on if it was on fire. So it is what it is. Pittsburgh, Pennsylvania, and Scranton, Pennsylvania. Pennsylvania is my market where I buy rental properties and wholesale properties throughout the DMV area, and sometimes Pennsylvania as well. And Salisbury, Maryland. So those are the areas that are, it's definitely not the Washington D.C.s, the New York Cities, the Los Angeles, the Miamis. It's in those specific markets when it comes to doing fixed flipping or even having rental properties in today's world. But anyways, on that note, do the great day for things. Like, share, and subscribe. Have a great day. As I always say, make money move, so you're gonna live, bro, like a fool. Take care, family.